Hurrah, hurrah, hurrah. Welcome to the show, guys. Welcome to the show. If you're new to the show, smash that like button, hit that subscribe. Let's get this community growing. Let's do these daily updates and let's move on with the market. So we're going to do a market update just to double check what's going on and see how the market is reacting to yesterday's move, which I wouldn't really call. So I know some people like to call it like, oh, you know, it was a dump. I don't call it a dump. I call it a confirmation, because yesterday whatever happened was a Bitcoin confirmation, in my opinion. I see Constant Alex here. Awesome, my brother. Nice to see you on the show. Let's do this. Let's do this. So this is on a minute chart. I'm just observing on a minute chart, and I have actually been observing on the minute since yesterday. This is hilarious, right? I know some people are going to say, dude, you're mad. Maybe I am. But sometimes, you know what? You just got to zoom in to see what's really happening on the candles. And I can see that we dump. And then we created some magic on the chart. I think I can show you if I do this. The magic on the chart was that we were trending up again. So what we created was this upward trend line here, right? And we can see we're holding support. We found some support here and we've been trending back up again. These are on the minute, by the way, so it's hilarious, right? On the minute. So yeah, that's what I saw, and so far so good. And this is a target for me, so we need to slightly creep up again and then get above this 63,995. Call it 64, it doesn't matter. But that's where we need to go back up again to reverse this micro trend that we've just formed because of where we were, right? And it's absolutely fine. There's no harm at all. I did say to you yesterday, I said, look guys, we created a brand new high. We need to confirm that this is the high. We need to confirm that we have a baseline, and our baseline was already set up around this 60 to 61k level. And this now is confirming that this is the floor, which is good. That means now we can start making the next move. Because remember, every pattern that we have, nothing goes up straight, and we always do these things on repeat, literally. Right, we always go, you know, say for example here we go up, and then we come back a little bit, we go up, we come back a little bit, we go up, we come back, and we confirm these zones. I see KR here. Awesome, my brother. Awesome, nice to see you here. So that's the kind of patterns we see, and so far everything's looking healthy, everything's looking really cool. I love the fact that we had a low yesterday, because if we didn't have a low yesterday, then it's unexpectable, right? Then we are in this zone where, you know, the market keeps on pumping up and we are completely unaware of what's going to happen. So the situation would have been that we continuously pump, but we don't know how far we're going to go down. I see SM here, also my brother. So this would have been far more scary and far more dangerous. And you know, yesterday as well, I mentioned on Discord, I believe, I think Constant, I think you asked, right? Or somebody asked anyway. They said the favorite color is green. I said my favorite color is red. This is my favorite color, because on a candle, on a chart, a red is a lot more powerful than a green, in my opinion, or here it's blue obviously, but it's a lot more powerful. People hate the red color. Red, it has this kind of an issue, but not with me. I love the red, because the red gives me the bottom. You know, I'm one of those guys, I don't focus on the top of the market, because the top could be infinite, but the bottom is key for me to understand that if the market is stable or not. And this red made me happy. I know some people are going to think this guy's a weirdo, what the hell is wrong with him, but that's the fact, right? I am happy when I see a red, because I only focus on what the low of the market can be, not the high. The high for me is infinite. The high for me is absolutely infinite. We can go to the moon. That's a different story. You know what I mean? Just keep on taking your profits on the way up, or do whatever you want to do. Book yourself a ticket on one of Elon Musk's thing and carry on. You know what I mean? But the bottom is what tells us, are we still in the game or not? So I hope this makes sense, that, you know, yes, I might be weird that I like the reds, but I like the reds because it tells me how low we can go and how low we are, and if this is a baseline for us. And you know, if we're still trending up, right? So far so good. I'm super solid. I'm super happy about this, because you know, I've got myself a base and I'm like, okay, this is confirmed, this is the base. It was a little bit of an engulfing candle that took over 2 candles, which is fine as long as we can now creep back up baby steps and then create another high. Absolutely fine. And this was technically the first ever higher low. So a higher low is never a bad thing. It's always a good thing. We need higher lows to take a break. Sometimes when you're moving so fast, you got to have those big Brembo breaks or whatever, right? And you're gonna have to be able to slow down the market. This is what's happened. Yamvi says music is quite loud. No worries, my brother. Let's have a look at the music. For me, it's not loud enough, but if you say it's loud, bro, let's bring it down a little bit. All right, is that music better? Is that music better? Let me know if the music is much better now. And let's go for it. Music is just there to kill the background noise. Actually, there is no background noise here, but I still like to leave some music on. And I'm actually listening to the music myself while I'm talking here. So is this good enough for you? Hope it is. Let me know. So yeah, I'm really happy to see this red. And then a blue after that, which is okay. Obviously, we need to climb up. We've still got a long time to go. I mean, today we've still got 10 hours to do what we need to do. Friday's usually a bit, I told you, it can be either up or down, because normally on a Friday you have the institutions, the day traders or the guys on the trading desk. They usually close their positions before they leave because they're not going to be on the computer for the next 2 days. So we do see this little bit of a dump or a gap, like, you know, usually on the CME, for example, you do see a CME gap for the Saturday, Sunday. So let's see how that goes. But we're here to play the game. We play 24/7, 365. We don't give a damn. We're not the institutions. We're the public. We're the people. And this is a people's currency. Bitcoin is, you know, human power, basically, our monetary power. We control what the market does. And, you know, we're happy for them to go away from the desks and for us to take this over on a Saturday, Sunday and see where this goes. So I've got a good feeling looking at this right now. So seeing this one candle here, it's very simple. I'm just using basic logic, nothing more. I'm saying this one blue candle for me or green candle for you, this is giving me enough information to say, well, weekend looks good. Weekend looks good. We might even break this 66, well, it was actually 67k. We might actually break this 67k and continue upwards. So look, so far looking good. I mean, if I saw a red candle today, then I would have been a bit iffy. You know what I mean? I would have been really iffy. That would have broken this upward trend line and also probably come and find support around here, which would bring us back down to the 57. That's almost a 10k gap. You know, from 67 to 57, that's a 10k gap. That will freak a lot of people. Of course, some of us bulls in the market, we would not be bothered at all as long as we are above this level here, this 53 level. We're solid. But the people who don't understand, they would have been shaken out. So I'm really happy this didn't happen. It didn't shake out too many people, and confidence is still in the game. You know what I mean? So this is really cool. Also talking about trend lines, I did show something. Let me do this. I did show something, I believe yesterday. Yeah, it was yesterday. Sorry, my mind doesn't work sometimes because there's so many stuff, and I kind of forget sometimes. This is the trend, and I'm happy. All right, it's holding the trend. It's way above the trend line. Also, while I'm on this, actually, I want to show you one other thing. This is going to be really cool, guys. This is going to be really cool. So there was something else I was looking at, and I think it's important for me to show you this. Also, actually, before I go there, I was talking about the RSI on Discord, and this is what I was talking about. The daily RSI, stochastic RSI, is pointing down. The blue has led down, means the trader's signal is that, guys, wait for it to come back down here, and then when it bounces, that's when we should pick up. This is a trading signal, stochastic RSI trading signal. The people sentiment, which is the relative index RSI, that's now become a bit confused, and it was coming down and it pumped back up again. So this is showing us a little bit of a bullish divergence, right? Saying, okay, guys, we still want to stay bullish, we still want to continue up, you know. So for that reason, I did mention that how everything just looks slightly kind of, hold on, let me just get this here. You know, there's this bearish and bullish thing going on right now. So the trading is bearish. Obviously you shouldn't be trading anyway, because you're just going to get yourself screwed. And then you have this kind of a bullish divergence forming here, where we have this bullish flip on the RSI telling us that, guys, we've got plenty of room to grow. And remember what I said before as well, there's nothing stopping us from going higher than these lines. So where we are right now, we could easily pump up and go to the RSI higher levels, right? So we can go all the way to 89, 90 RSI. Absolutely fine. No harm in that at all. So far so good. Now we did look at the weekly, and the weekly, as I said, look, also on the weekly you can see that we did pump up. This is settling down a little bit, but it doesn't make any difference, because this could stay here for a few weeks. It could easily stay here for 2, 3, 4 weeks. No harm at all. That's the trading signal. RSI is what we're looking at, and so far RSI is still bullish, still showing us that RSI wants to still climb up. And as I said, RSI could easily come back down to these levels and also stay up there 2, 3 weeks at a go. So let's see how that one reacts, how all of this does. Now I want to show you something else. I want to get rid of all of this, and I want to show you, let's get it onto this, let's get it onto weekly's good. And we're just going to do something very simple here. We're going to do a moving average, and we're going to do 3 moving average here. Moving average, moving average, moving average. All right, get rid of that, get rid of that, get rid of this, and we're going to do 1 more moving average, MA, right? So that's all we're doing, 3 moving averages. Number 1 moving average, we're going to set this up, is going to be 21. Right, I'm going to change the color, make it brighter, keep it blue. That's fine. That's going to be our 21. The next one, we're going to change it to 50, and we're going to change the color to green, make it larger. Great, done. The third one, we're going to make it brighter, yellow is fine, and we're going to do 200. So we're doing this on a weekly, and we're going to move over to the daily very soon as well. Just wanted to show you a few bits and bobs here. Someone actually saw me doing this chart yesterday, and they're like, what is all of this? I've never seen this chart before. I said, yeah, because I don't really show this kind of stuff many times. So let's do this, very simple. So we know this is 21, we know this is 50, we know this is 200. Simple. So what we want to do is look for these points where we can see the 20 bounce. So we don't want to look at where it bounced down, we want to see where it's been bouncing up and what happens after it comes out of these zones, right? So it came out of this 20 zone, what does it do? So this whole area here is out of the 21 zone. Okay, let's do this over and over again so you'll understand exactly what happened. I don't even have to explain it once you see what it does whenever it comes out of these 21 moving average weekly zones, right? So these are 21 weekly moving average zones, right? And so that will give us a nice little probability to what the market does whenever it comes out. Okay, so we're doing the entire history here. Okay, and here we don't really have it, but I can still just put one here, for example, just for the sake of it, because remember, this is the early data. But what we see is whenever we come out of this 21 zone, we do start moving away, and that's when we peak up. Whenever we come out of this, if we're too close, we don't really peak out. You see, we don't really peak out, but when we finally decide to, we do these peaks, we move really further away, if that makes any sense to you, right? So we move further away every single time we did this. When we move further away, that's when we start seeing these things. But normally we do bounce on this 21 week moving average, so we can see all of this, like how we bounce. But whenever we separate ourselves, it's a whole different story. So just looking at this, and this is what I saw: separation, a complete separation. Yekta, I see Yekta here. Awesome, nice to see you here. So this is crazy, right? So actually wrong place, let me just put it here. So we see how we came here and we were close, and then here we see a complete separation. That's what I was looking for. The separation was important for me, so I wanted to see how far did we separate. You know, when you look at these areas, you can see the separation wasn't that high, but here we can see the separation, right? Means the distance. That as a clear indicator that 21 week moving average, we have a separation now. rocket ship is about to launch, right? So this is just using the 21-week moving average. Now, if I use a higher time frame, which is over a year, and we're talking about the right, and we went super solid on this. So that one's that, right? Let's show you another bounce on the 50. Right, this we don't want to use because it did come out of the 50, but this is where we had the Black Swan event. But I do want to use this, right, because this was a out of the 50 zone. So here is a glitch. I'll call it a glitch because this is an event that you can't control, but you do see how this kind of indicated that the market's about to start. And remember, I said to everybody, for me, the 2019 was when the bull run started because of this 50 week, right? Okay, so let's keep it here. Let's keep it here. Let's move on to the next one. And you can see this 50-week bounce also happened here. Same area also happened here. So again, we have this 51-week bounce, right? And then obviously we have another bounce here. We can use, or we don't have to, it doesn't matter, but we did have another area here. So we see these 50-week, the bounce, they're also very powerful. Right, we do come back here and we do test this. Now the 200-week here is not relevant, so I won't really bother with those. Okay, that's the 200-week, not quite relevant. What is relevant here is something else, but I'll show you on a daily something else as well. So on the daily, we've got the 21-day, not that relevant, but the 50-week is quite relevant. So you can see how the 50-week we broke out of that, and which is pretty similar. I mean, if you're going to take the 50-week and divide that, that's a 25-week, and then we have a 21. So you can just about put an average and say 21 is fine. So the 50-week here works just similar like the 21-week, and we can see that we have this distance here. You know how we have the distance, because normally what you will see, we constantly kiss the 50. We constantly kiss this 21-day. We constantly stay around this 21-day, right? Constantly stay around this 21-day. But the 50 is a power level. So you see how we stay around this 50, and this is similar to how the 21-week works. Constantly stay around this. This is where when we fall below this, we're bearish. As long as we can stay above the 50 on the daily, as you can see, we're always up. Right, so we can see the same pattern playing on two different time frames. And then of course we have the 200-week moving average, which is a powerful thing as well on the daily. All right, it's a 200-day, remember. And what you see here is that, you know, when we fall below the 200-day, of course we're slightly bearish, and this is mostly the bull cross or the death cross nonsense that we have. I don't think it's that relevant, but I think the 50 on the daily is very relevant, and the 21 on the weekly is very relevant, right? Very, very powerful tools to watch. The reason I don't use this on 200 weekly is because it's like close to 4 years. It's not the best data. Is that a 100x long sign? Asked Yekta Gulen. We'll check. So I'll tell you in a bit. Yeah, so 200 week for me is like more like 3.5 years plus, and it's kind of a random thing. I don't use that. What I do use is the HMA, right? The whole moving average, right? Sorry, not ham, HMA, right? The whole moving average on 104 week is a powerful tool, and I talk about this quite often, and you can see how the whole moving average, right, which is 104 week, so that's 2 years, close to 2 years, 2 years actually on the dot, and then the 50 week, which is just under 1 year, creates this sign, you know, where we bounce. We either stay above or we stay down, right? So remember when I drew this pattern few months ago, actually it was few months ago, I drew a pattern and I said, look guys, we're going to do this, and then we're going to break out. I talked about it. So exactly as we did on the video, the way we mentioned the pattern played out, you know, to the last T. It was perfectly played, utilized. It didn't do anything different to the pattern. I drew this pattern on the chart. You can go and see the video, and this is exactly what we did. We bounced here exactly as predicted, came back down here, and then we found a little bit of resistance here, and then we finally broke above, and we've just confirmed this. Now we know that this scenario with the 104 hull moving average And we see when it confirms the power moves it has behind it. So this area here could easily, and this is what I'm going to say. So Yekta, I believe this might answer your question. Give me a second. Let me draw this to this candle. Let's put it to this candle because I think this is where the hull changed, right? So let's do this. So Yekta, if I was to give you an answer without actually saying anything and just draw something for you, this is what I see. Right, get ready to freak out a little bit. Boom. This is what I see, Yekta. So is it 100x time? Maybe. If this whole moving average just plays exactly the same as this, well, we should be below this line. We should stay, sorry, this line should stay below us, right, like this. And that's the potential, a 349k BTC. Of course, we want to stay grounded a little bit and say, okay, let's be a little bit more realistic, have our targets to be a little bit more realistic, because we could easily have a situation like this. So if we had a situation like this, what would be the scenario? Well, we can just take a copy of that and actually follow this through as well and say, okay, what if we did this where we came all the way up to here and we fell back in? So this candle here, what if we had something like this? Well, it's okay, we can use that. We can change the color here, put it to purple, move this over to this zone here, and you'll see what I mean, right? So now we have a slightly different target, and that target is boom, 167k as a top, right? So this is us giving multiple scenarios based on what happens slightly after we break out of the whole moving average. I'm going to do the same here, and it gets a little bit crazy, but bear with me, right? You're going to love all of this. So we have this whole moving here. So we were down below, actually here, this is where we had the whole moving average. So, and remember, this is a 2-year cycle. Hull moving average is 104 weeks. My setup is 104 weeks. And then we see this candle here is where we had the last one. And let's change the color for this to green. And let's move it back to that area we have. Right, let's move it back to this area. And if we had this crazy, insane move, well, that takes us to another level. I told you it gets a little bit crazy when you start looking at this. That gives us a 537k. And we can do this over and over again, but obviously I don't want to go too far because those data may not be relevant to us. But these patterns here, this cycles here, and this whole cycle, that if you look at the 104, remember HMA, I've got mine set up to work on 104 week. So that gives me 2 years worth of data. It's very similar to Bitcoin Investor Tool, the 2-year moving average and the 2-year moving cycle top. So this is what I'm seeing. I'm seeing a realistic figure at the 167 currently. Then I'm seeing a 349k possible, and then I'm seeing an extremely hyper optimistic level this cycle to be at the 537. It's all good. We have no issues with any of these patterns from what we're seeing. Everything seems awesome. I'm not complaining, right? So what I'm going to do now, I'm going to take my moving averages off. I don't really need them, but I'm going to keep my HMA. And then what I'm going to do is activate one specific indicator. And you know I talk about this all the time. I talk about this every single time. So this is the Bitcoin logarithmic indicator, right? And put it on auto, put this on, and I want to show you the realistic price prediction that we had. Is it real or is it possible or not? So we're still on the weekly. You can see the entire chart here. Let's zoom in to this area. Look at this. From where we are to where it's possible. How funny is that? It's actually bang on. The realistic level of 167 is bang on. And that kind of takes us to March 2022. Isn't that a bit hilarious? Because I also have another video where I talked about March 2022. Really, really funny that this does drag us to March 2022. But of course, we want to observe all of this. At any point, the market could reverse. And now, obviously, for me being a bull, what kind of patterns do I like? That's the key. I don't like this yellow pattern. So out of these two patterns here, I don't mind the purple one. I don't mind the green one, but I hate this yellow pattern, right? So if this yellow pattern was to play, then the market just ends very soon. Let's just put it this way, it ends too quick for me. I don't like this. My most favorite pattern is the green pattern, because the green pattern goes sideways, drags along, takes forever, everyone gets bored, BTC does its thing and comes all the way to this level, so which is closer to this level, but it just takes a little bit longer and goes all the way up to 2023. This is a much more healthy pattern, because this gives us enough time to also change these levels to higher levels, right? If that makes any sense. So that's my most favorite pattern, the green one. My most favorite. Yellow one is okay, but it's hyper parabolic. I'm not, you know, this is like a blow off top, a super blow off top, and then it could be like a rock coming down here. Don't really want to see that, but you can see the realistic pattern right now from where we are is more like this area here if we play out like this. So it might be very short-lived, and you can see this is predicting not too long, because we're kind of near to November right now, so I'll just say November. So we don't really have many months. I've got about 5 months to top out, and actually the top would be here, not even here. So if I was to do here, it's February. So from now to February, 4 months. That's what this is telling me if I was to overlay this pattern, you know. And I have done another video like this previously as well, but this would be the top around February-ish, super bullish. And based on the HMA, now that we found support, I'm going to give you your answer now, Yekta. Obviously, you want to know that, are we going to go on 100x? Yes, but not yet. Okay, so let me stop you there. 100x is coming, but not yet. Also, I don't need the HMA. Right, 100x is definitely coming, just not yet. So be a little bit patient. Why do I say not yet? Actually, I can show you this here. There's a big reason to why not yet. For a 100x trade, what I need you to observe is this one level here. This one level here. Now, please stay grounded and stay calm. It will make total sense to you. Actually, let me get rid of some of these drawings because I don't need them. Let me get rid of these. All right, we don't need them because they're just going to make a lot of noise on the chart. Right now, what you need to see is just simple, clear facts. In fact, to do that, I'm going to do this and get rid of this line as well, right? And bring this line to the actual level, right? Actual level here. So what I want you to see is, of course, we've created a new high. We broke the previous high. All of this is good, but this is noise. The fact is we are still below the previous Fibonacci lines, and the 100x attempt should be on this line, because what we're seeing right now is, if you look carefully, we are below this line, and here we were above this line. Here we attempted to touch this line, and here we are right now just above this line. So we still have 1, 2 lines to test. So the trade, the 100x trade, should be here, right? Nowhere below this level. So anything could happen. We could easily have a top here and come back down here. So your trade should be here, because this is the point where we go hyper parabolic, right? And my exit is this red line here. So after 87k, don't look at the 87k. This is where, as I said, it's going to confuse you, because you're going to look at the price, but I'm looking at the Fibonacci's, and I'm saying, well, we've already attempted to touch this fourth from the top. So 1, 2, 3, 4 from the top. We've already attempted that. And in fact, if I do put the candles on, delete these drawings, you might see we did almost wick. If you look carefully, right, we almost, like this one here, we almost wicked there, and we got rejected. So this is now a significant rejection point, and this is funny I'm saying this. I know a lot of people would not tell you this, right? This level here is a rejection point on this logarithmic chart, right? This Fibonacci level is now a key level we need to cross. So now that we've done this, of course, it's looking at about 89k. You know, that would be that one trade. You do a nice little mega trade if you were to do a trade, obviously with a stop loss, and then you just climb it up super fast, get the hell out as soon as you can, make 1,000% and get out. Right?